You may have seen this recently that all branches of a major Australian bank are set to become fully cashless in a push towards completely digital payments. Customers at Macquarie Bank will no longer be able to withdraw or deposit cash or use cheques at any of their branch from May 20, so 10 days' time. Over-the-counter services at Macquarie Bank offices will go as well. However, customers will still be able to use ATMs. Why are they doing it? They say that it is to make banking safe, quick, more convenient. Will we see that here? You could be forgiven to think we could be going that way. There's fewer cash machines and bank branches that are shutting down, making it hard, and getting more retailers too that are refusing to accept cash. Well, fear not. The Reserve Bank's Director of Money and Cash, Ian Woolford, leads a project aimed at ensuring cash remains in circulation for the foreseeable future, and he joins me now. Ian, good afternoon. Welcome to the platform.
Thank you for having me.
What do you make of Ian, of what the Macquarie Bank is doing?
Well, I find it pretty concerning. And, it's a bit difficult to comment on the exact details of a bank offshore, but I'd say the explanation sounds a bit self-serving to me. I mean, this will be cost-cutting, largely driving where they're coming from. And it is easier for banks to pivot people into digital. It's cheaper for them. And so you can understand why they want to do it. But, it's a strange world where you can't deposit or take cash out of a bank.
So if we come back to New Zealand, an RBNZ survey of the public in 2021 found just 63% of Kiwis were using cash, and that was a decrease from 2019 where 96% used it regularly. So if it is declining, Ian, who is still using cash and for what, do you think?
Well, the numbers, it's really hard to get to the bottom of what's going on because on the one hand, yes, you're right, cash used for transactions has dropped quite a lot. But there's a couple of things going on there, I think. One is there was a really sharp drop during COVID, of course, because there was a lockdown and then, there were lots of places stopped taking cash because of actually quite misplaced fears about COVID transmission and the like. So there was that. Over the same period, in fact, over the last decade or two, there's been a pretty dramatic drop in bank branches and ATMs, and so the ways in which people can access cash has got a bit harder as well. But the other thing to say is, there's more cash in circulation now than there's ever been. So people use cash a bit differently. And when we engage with the public and we do things like we sit down and have workshops with groups of people and, try and get representative groups and the like, we do surveys. And what we hear is the majority of people really want cash to be available for when they want to use it. Even though they're not using it that much, for a variety of reasons,
they want to be able to access it. Yeah.
Yeah. And some people are wholly reliant on cash, and some people, one of the things in our latest survey shows that there's actually an increase in the number of people that are using cash more than 7 times a week. So it's not all doom and gloom as long as people can get the cash when they need it.
If you so Ian, there are people using it. Is it maybe? I thought about, I was thinking who uses cash, who doesn't use cash. I like to have cash, a little bit of cash. I think cash is king. But is the lack maybe of people that don't use it generational? Is it the fact that maybe younger generations are more digitally savvy?
I think that's mostly true. I think we definitely get quite stronger reactions from older generations, but it's also true that people in the rural, in smaller towns outside of the cities value it more. The thing that I think is a bit of an open question, actually, when you talk about the youth being more digitally savvy, I think one of the things that goes with that is being more aware of how important your data is. right? And so, especially the younger generations, they've grown up in a fully digital world, and they're probably much better than older generations in protecting their privacy. And so I think, to me, I wouldn't be at all surprised if we see younger people starting to use cash a little bit more. Now, I'm not being naive here. Of course, people like using Apple Pay or whatever way that they used to pay their cash, pay for transactions. But I'm just saying I don't think it's the sort of thing that cash will die out with older generations. I think it'll be around for a long time.
Ian, is it true? What is that the Reserve Bank's exploring the idea of digital currency? How is that different from what is on offer now? Because you mentioned Apple Pay and other ways of paying. What are you looking at?
Yeah, we're looking at trying to bring out a digital form of cash. Now, that is not to replace cash. Cash will always be there. But what it would do is it would have as many of the same features of cash in the sense that you could exchange it between people, right? So reach into my pocket, pull out $5, I hand it to someone, nephew for mowing the lawn or whatever. You could use cash that way. It was fully backed by the government in that sense. It will be private. Now, I know some people are concerned about the idea of government money, but what we're saying is that privacy will be built into this. So the Reserve Bank or the government will not see either the transactions or who actually owns the cash. The idea here is just like you have a bank account at the moment and you choose to pay with EFTPOS or however, you would choose to pay with digital cash. Now, the question then is, well, why would you do that if you've got a bank account? Well, one reason is because of the functionality that it has. So you'd be able to do it offline, when the internet's down. You'd be able to do it directly person to person, so you wouldn't have to go via a bank if you didn't want to. And you're not taking a credit risk, because one of the things that people don't quite understand is because they might operate entirely in a digital system, right? They might, their salary goes into their bank account, they pay with EFTPOS, they never touch cash. But what happens when you're concerned about your bank or what's happening in the economy? People go to the bank and they want to take the money out in cash because they know what it's worth, they know they can trust it. And so that's a sort of a key point of difference between central bank digital cash, what we're calling digital cash, and private sector. Because all you've really got is a claim on a financial institution. There's no dollar for dollar backing that, sitting down in a vault. Now, banks in New Zealand are safe. There's nothing to worry about. But all I'm saying is that there are a number of points of difference. And what we are really focused on here is not to try and convince everyone to use digital cash. What we want to do is give people choice to use their bank account, choice to use cash, choice to use digital cash. But by doing that, what we're trying to do is drive more innovation into the banking system, because it's slow, it's expensive, it's not innovating in the way that you see in other countries. So we're hoping that this digital cash will enable innovation and more efficient outcomes that will benefit everyone.